moving averages, this is the third concept here. So what are moving averages? In their most simple form, they're a mathematical mean of a set of price data over a specific number of bars. There's a number of benefits of using moving averages. They smooth price data by creating a continuously updated average price. They can be used to identify trend. We can use them to classify market type, and we can also use them to determine support and resistance levels. Of course, moving averages are a very common indicator used in technical analysis, with the 50 and the 200 being very popular and generally considered to be important trading signals. The concept of moving averages has also been tested in the scholarly market literature and is an academically rigorous concept. There's a number of authors out there who have researched this, and of course, as you all know, Ken Long has used moving averages in his work for decades. So how do we apply moving averages? We have monthly asset allocation systems. We call them portfolio moving average systems, and they are driven solely by the concept of momentum. They're very simple systems that generate very powerful results. And in these systems, moving averages help us in a number of ways. So we use moving averages to assess market conditions across the world's major markets. We allocate assets to the global markets with the most favorable conditions. We use moving averages to avoid major bear markets while also capturing long-term trends and avoiding market noise. So what kind of results can we generate with the concept of moving averages? We're looking at backtest data for 3 PMA systems. On the right in blue, the first column labeled PMA low is a system I built for the objective of conservative growth with lower drawdowns, with the goal of outperforming the 60-40 buy and hold approach. The third column labeled PMA high is a system I built for the objective of aggressive growth where higher drawdowns are okay. And the column labeled PMA medium I built for the objective with medium growth, medium drawdowns.
Hey, let me also just interject quickly here that so this one starts back in 07, which was important because we wanted to make sure that we were capturing multiple moments when the market had extraordinary drawdowns. So that's including the 2008 long-term capital management meltdown and the housing market meltdown and the COVID meltdown. Right. So you're getting 3 absolutely emotionally damaging market collapses as well as moments of growth. So this one, these systems have survived 3 existential threats to the psychology of the trader, if I can say it that way. Yes. The greatest pain of market meltdowns is not the temporary loss of 50 to 70% of your capital, although that is painful. The greater pain is to use that as a reason to not get back into the market and then watch it move subsequently to higher highs. And then you not only get to suffer all the way down, but then you avoid the recovery period. And that hurts even more and just solidifies a person's belief that markets are rigged against them and they can't do anything about it. That combination, the double whammy of bear markets, is overlooked in the literature. It's the pain of loss, but it's even greater the pain of missed recovery. Now, if you're an old fat guy like me, sometimes you're not going to be around long enough to get it back, and so you got to be concerned about preserving what you have. But for longer-term market participants, the experience of catastrophic loss either kicks them out of the game or it chases them away from the game forever and ever. So it's important to note that these systems not only endured the losses, but also participated in the recovery moves and then stayed with it once markets got better. So go ahead, Bill. I wanted to make that point. Carry on.
Yeah, Ken, it's a fantastic point. You know, I use these systems for my wife's retirement account, for my son's college education account, and have traded these through some really nasty moments in stock market history, including the COVID crash. And yeah, the psychological, the emotional, and the financial impact of getting out of the way of those major bears and then getting back in to compound the gains that we preserved once the market starts to head back up again. It's just enormous. I just can't convey really very well in words the huge difference that makes. And to your point, when we look at the stats here, so we look at PMA medium and PMA high, and I said that I designed those with the objective of more aggressive growth where higher drawdowns are okay. But when we look at the drawdown stats here, we see that actually the drawdowns are less than that of the S&P and also less than that of 60-40 buy and hold. So for example, if we look at PMA medium, we have a drawdown that's less than 60-40. So that's, your average retail investing public with a return that's higher than the S&P 500. And same thing when we look at PMA high. So it's really phenomenal, the power of some very simple concepts like moving averages, like momentum.
Yeah, it's not ironic, or maybe it is, that 2022 and 2023 is the worst performing years of the 60-40 old reliable system in the last 40 years. And so at the very time you need it the most to protect against volatility in a world at war is the time when the 60-40 conservative wisdom fails. Which is, sad but true, that the fat tail event is what you're trying to protect against with that kind of diversification, and yet when it occurs, that's when it fails. That's like having a business plan that works all the time except for when you need it the most in a time of crisis. Well, that ain't any good. That's like an insurance policy, against a flood that has a little footnote on it that says, offer not valid during times of flood. Well, that's not much flood insurance. So I guess that's an important point. The other thing, just as a rule of thumb for the folks out there, when you're taking a look at these systems, just a handy way to understand those large numbers is the rule of 72. When you take a look at the compounded annual growth rate, divide that number into 72, and that tells you how many years it takes at that rate to double your money. So if you went to the first column and it was 9.5, that goes into 72 7 times. So then if I started with $1 and doubled it 7 times, at the end of 16 years, I should have 1, 2, 4, 8, 16, 32, around 7. So that's about right. And the same thing on the 16, it's doubling every 4.5 or 5 years. That starts becoming significant because you end up getting a growth rate doesn't come all at once. This is the slow incremental move. So there's some good books out there now that are talking about disasters occur frequently, but the good news takes time and slow growth to compound and to benefit. So you don't get, again, it's the good news is not symmetrical with the bad news. And the lessons that people should have learned from market collapses was that's where the opportunity to plant the new forest after the fire has burned everything down, that you got to be thinking about the next cycle and not being an emotional shock that the markets melt down. That's not surprising that markets melt down. That's the expectation that should be with you all the time. Manage against the risk, and then when the risk event occurs, be ready to take remedial action and recovery action and the rebuilding action. That's what we got to be able to have in our mind. So when times are great, you can't be optimistic, enthusiastic. You got to sort of be an old grudge, curmudgeon. And when times are bad, you can't be in panic and despair. So you always got to take the sort of the balancing emotional stance in order to stay true to applying the rules that are appropriate. So that's what I wanted to say about this section. Go ahead.
Yeah, and Ken, to your point, in researching, especially these PMA-based monthly asset allocation systems, when you look into the details of the performance, uh, one of the keys or the secrets, if you will, to the long-term outperformance is that they avoid those major bear markets. And so you preserve all the gains that you've made in those upward grinding slow years. And then you've got all that capital to put to work when the market turns around. And so those gains just keep compounding over time. So to your point, yeah, that's exactly what's going on with these systems.
Yeah. Yeah, something I would add in here too is that when you're working with the moving averages, so people that hate them or talk smack about them always say, well, you know, it's a lagging indicator, and so it's like trying to drive a car by looking through the rearview mirror. Yeah, but no. What it does is reflects sort of a consensus of the herd mentality. And so combinations of moving averages now start making sense, where you want the slow one to reflect the conservative portion of the the fifth mouse and the fourth mouse, and then you want something on the front end that's showing how quickly the leading edge can change, and then when the fast crosses over the slow, you're in kind of the no man's land of a transition state that the long-term guys haven't felt the fear yet, but the leading guys have already started posturing for the downside. Now, which one is right? You know, we know that most of the time the longer-term trend is going to be good. That's the basis in momentum for all long-term trend-following systems. But those typically have to endure larger drawdowns and take long periods of time for that advantage to unfold. So by doing the low, medium, and high, what you're doing there is adjusting fast-moving averages in order to get some contingency rules to allow us to participate in those volatile transformative states, the sideways markets. You know, a lot of folks have spent a lot of time and money trying to optimize the style or the type of moving averages. The best thing to do is to just get your favorite symbol and then sling all of them on there, all looking at the same look-back period, and then see the actual difference between triangular moving averages, weighted moving averages, exponential, double exponential, the Jurek moving averages, which are based in, signal processing. The biggest improvement that I've seen over traditional moving averages is that regression line moving average, the least squares moving average, because it's about 3 times more. You'll see that the least squares moving average, which is another way to say the regression line moving average, is much more adaptive than all of those other ones, except possibly the Jurek. But you got to pay money for the Jurek. I use the moving averages in 2 different ways. One of them is to use my own versions to help me make my decisions. But the second way is I like looking at the simple moving averages, 10, 20, 50, 100, 200, in order to understand how the herd feels at any given time, to decide, hey, are we running out of the milk of human kindness? Are they starting to get spooked? Are they? If there are millions of people looking at the crossover of the 50 and the 200, and half of them are going to make a decision, then that has a power all of its own. Is the decision, is that a good indicator because it works, or does it work because people believe in it? That's sort of. Do people believe in it because it works? Does it work because people believe in it? It's both of those. It is a convergence of belief and evidence, in essence. So I always, when I'm looking at indicators that are popularly available, I always have them set to the default positions, because that's where most people are going to have them, and I understand what the common interpretation of them is. But then I use that information to help me tune my decision making. If we go back to the PSAR, nobody's using the PSAR as a way to trigger the reversals or to look at the size of the box to gear your position size, and they're not counting the dots, and they're not using regression lines as the data source. They're trying to capture the volatility of the bar inside the PSAR dot, whereas I believe you should be using the Bollinger Bands or your risk box and go for a smooth PSAR. So when you start looking at all three of these features, these actually share a common point of view about what the data is, where it comes from, and how to interpret it. And you'll actually see that Bill's using all three of these ideas in the construction of robust systems. So these are not three separate ideas at the end of the day. These are actually mutually reinforcing ideas, that the PSAR plus momentum plus moving averages for filters all are informing the system design, and that's what makes these things robust. So those were the comments that I wanted to make about the moving averages. I think it's important to understand why they work, how people look at them, and I might also say that I even use the moving averages inside other indicators, like when we look at the MACD histogram and the 4 seasons. I use a moving average on the MACD signal line to determine how far has that reversed before it becomes significant. I put Bollinger Bands on indicators for exactly the same reason, to start understanding how the interpretation of the indicator could be understood from data. So I want to make that point too. So let's open it up to any other questions, broad in nature, or on anything that we've covered for the people. And while we're waiting for those maybe to come in, Bill, any concluding remarks or maybe some comments about where you're looking for future excursions?
Yeah, so I would just say to everybody here that keep it simple. You know, that I am a student just like all of you guys. Like I said, Ken is an endless stream of genius ideas. Keep it simple. Start with the ones that resonate with you, that fit with you, that you understand. And there's really no secret to developing systems other than just shoveling coal, which Ken talks about all the time. It's just work. The coal doesn't shovel itself. I would say get an accountability partner and be consistent and regular with your work. And it's doable. It's all doable.
Yeah, I think the biggest advantage of the accountability partner is that it lets you bring to the surface your own insecurities, and then once you look at them in the light of the day, you just realize, oh, that's just a consideration, and I can account for the fear, so I can take the sting out of the fear. When you have that inside you, it hurts. It hurts your internal organs. When you bring that out into the light of the day, you actually get someone who's not feeling the fear, who can help you understand ways to mitigate it or protect against it. So you're getting the advantage of their rational mind with your own fears. And then when it comes to research, it allows you to offset the risk of your hidden assumptions or your biases, because they're looking at it fresh, and it's easier for them to ask the questions that expose maybe some of the shortfalls or the limits of our beliefs. So the accountability partner and sharing the research is great. It's also great when it comes to developing trader expertise, in that you give your rule set to them to trade, and then you watch them try to trade it, and then that exposes areas where your rules are not complete because they're making assumptions. And you say, oh, no, that's not what I do, and then you use that to uncover your rules. Hidden rules. Mark asks about the 2R battle drill and says, is that integrated into your systems? My spider sense is that it is not. Can you confirm that?
Correct. It's not integrated into these systems that we look at, that we're talking about here, but that said, the 2R battle drill is freaking brilliant.
Yeah.
And I do apply it and components of it in other systems that I trade.
What I would say on that one is exactly what you said, and that is the 2R battle drill is a rules-based insight that tells you when you should consider turbocharging your result. So if you look at the high-performance racers, they use nitroglycerin or nitric oxide in their fuels for the burst, and that comes with a certain amount of danger. So the 2R battle drill is a power tool that's going to make you more of what you are. If you are an undisciplined person and you try to use the discipline of a 2R battle drill, you're going to go bust sooner. But if you're a disciplined person and you apply the 2R battle drill with discipline, then you can actually use that as an opportunity to make more money. So I think of it as in this way, that the initial stop that you set and the initial adjustments on your trailing stop or whatever you're using is designed to help you with the trade-off of how to let that thing grow in order to find the ones that are really going to be good. Think about a person who has a greenhouse. What you really want is the strongest. You want to plant 1,000 seeds, and then you want to take the 200 that are growing the best and the fastest and move them to the next stage greenhouse where only the most brilliant things are really growing the fastest because they're going to give you the most return. You also want to use those to help you develop the next generation of seeds that are built on tremendous growth, right? So the 2R battle drill is how I decide which ones to really concentrate on with the turbo. So if I'm using the 2R battle drill on the 30-minute bar, when they get 2R on the 30-minute, that's a signal that I should be using the 3-minute bar to optimize it even more. Conversely, if I plant 1,000 3-minute bars, the ones that end up becoming the best are ones that I can shift to a 30-minute bar and let them grow forever because they survived the initial volatility. So the 2R battle drill should be looked at, in my view, in that lens as a way to really turbocharge. You saw some evidence from just this week, from Friday, where Cliff, if you just took the first position and managed it correctly, you got something like 15R. If you use the 2R battle drill judiciously, it ended up being 30R and never took higher risk than you took on the first position. So that's the discipline of the 2R battle drill. Not only to add positions systematically, but also to systematically manage the increased risk that comes from larger positions. The discipline is on both. It's not just when to add, it's also when to exit and to get all out. So that's what I would add to that. Okay, any other questions for Bill? And you can use your audio if that's easier than typing. We got about another maybe 10 minutes of Bill's time at the most. And then what I would also say is, as you reflect on this, as other ideas come to you, if you'll send them to me, I will collect those for a second round of follow-up questions. Yeah, we'll do one more of these that once we get, maybe by the 15th of December, if you can get me your questions by then we'll let Bill answer those in an efficient manner from one consolidated list. So, Bill, if you don't mind doing that, then we'll make that a part of the deal. Yeah.
Happy to.
Yeah, I would also just point out, Bill won't toot his own horn, but we've migrated the workshops that he was teaching from BTI to our Owl Group Rizuku platform and made them part of our course catalog. And those include the question and answer sessions with the students as they were taught back then. So just the standalone versions of those are worthwhile and amazing. And if there's enough interest, we might persuade Bill to do live office hours in the future. He's got a lot of other things going on, but we'll play that by ear. But just the home study course versions plus all the recorded Q&A sessions of those are amazing. And those are in the course catalog as well. So last round for questions here. I just want to say that working with Bill is an absolute joy. He and I did a drumming album together. And when I say together, this is what I mean. That he took some of my spoken word performances. When I get on a roll sometimes, it almost has a ritual chanting approach to it, which I attribute to working with him, that he helps me find my inner rhythm, and then that takes over, and I'm able to express ideas to my inner rhythm, and I just trust that. And then he cleans that up and puts original soundtracks of rhythm to it. So we have an album of 10 songs. 5 of them are pure drumming, and those are my favorites. And then the other 5 are drum backgrounds to the spoken word, and we have that on sale for a nominal fee there in the that helps support our leadership scholarship programs. But it was just a hoot to do this. Oh, here's one from Mark. More of a comment, really. The diversity of systems in the community shows the mindsets behind it, and the fact that there's a lot of different ways for us to make a living in our ecosystem. You know, when we're going to listen to Sonal in the future and her journey to discover, is she a hunter or is she a farmer? And it turns out that she has both of those qualities, and she's learned to recognize that and reconcile them and let each part of her do its own thing. So she lets the farmer farm. And when the crops are growing, she wants to let them grow, which is now a good time to go hunting, you know. And it's good to be a hunter with the peace of mind knowing that the crops are at home being cared for and that there's food on the table when I leave here, so I reduce some of the stress of hunting. So the mindset of a year-round, multi-season tribal community of practice is absolutely central to the long-term advantage that we have, which I believe is built on trust, transparency, true storytelling, mutual support, and positivity. I rely on Bill's eternal optimism to help get me through my dark times. I have dark phases when I'm just not a very pleasant person, and that's not good for me or those around me. And Bill's eternal optimism and the drumming techniques that he's taught me have really helped me moderate my evil nature and turn it into positive energy. So here's one I want you thinking about, Bill, and that was what to do with evil intentions. What you have helped me do is the following thing, that when I feel evil intentions or fears coming in, I immediately go to a safe space and I exaggerate the feeling and I take it to its logical extreme and just feel all of it at once and take all that energy and put it in a container and launch that container into deep space. Done. Now I can take that ripped out empty darkness, that space that used to have all that, and I fill it with good soil and good seeds, and I grow flowers and tend that. And now that evil space has been filled with goodness. And once that's done, I let that grow. Like, you can't make flowers grow faster by pulling on them. You got to let them grow according to their own nature. But then I go into deep space, and then I take that nuclear waste safely away from other people, and I turn that hateful energy into batteries and storage, and safely bring that back to Earth and use that to power the power tools in the darkness. But I do that processing of the evil intent in a safe space where if I get burned, it's just me getting burned. It doesn't burn other people. And if it explodes, it doesn't harm anybody else or the environment around me. Well, that little cycle is sort of now a moving picture, almost cartoonish, that has soundtracks associated with it. And so when I'm going through that rhythm, in the sauna or in the safe space where people will not be offended by my poor drumming ability, I can go through all those and turn the energy into some kind of rhythm, which is the positivity that turns it into energy for my battery. So for me, the drumming incorporates all three methods of learning or modes of learning. There's the physical feel of your hands hitting the drum. There is the sound of the drum, but there's also the sound of your hands leaving the drum. That makes a noise. And the sound of your breathing. So you're hearing, and then you can also see your hands hitting the drum, and you can see the shape of the drum. So it's not just seeing, and it's not just hearing, and it's not just feeling. It turns out to be the integration of all three of those. And if I can say what the biggest lesson that I've ever learned from you was the simple insight that you cannot play the drum wrong. The drum can only be played. And whatever sound you made was the sound you played, and it was correct and true in that moment and complete. It was a complete statement of a beat. And that beat by itself cannot be wrong. It can only be true. It is exactly what it is. And once you learn to accept that, you just say, that was okay. That did no harm. That was a true statement of where I was. And then all of your fears and worries go away, and you become centered in the moment of the beat, and then the diminishing sound as it reverberates to the universe, and then the next one tells you, when you feel like, when is the next time I should play a beat? And whatever that is, you're right. That's when you should play it, is when you did play it. And then you just learn to trust that, and you just calm down. So I really found that to be helpful as a metaphor, and as a thing of itself. I mean, for 40 years I wanted to drum, but was always afraid of what it might sound like. And so you taught me that just play the drum. Just stop thinking so much. Just play the drum. So I want to thank you in public for that.
You're very welcome, Ken. I'm glad to know that I've been a contribution to you, because you've certainly been a huge blessing to me and my family. And I think I can speak on behalf of all of us here in the Tortoise community about what a gift that you are. So I'm thankful and honored that I've been able to give something back.
Well, I want you to go play some soccer and coach some soccer. That's really where you find out how to apply it. And I enjoy watching you learn how to coach soccer, because, I've learned to drum from you. Now maybe you get to learn a little bit about, coaching youth soccer and all the joys. And just remember that the best part of coaching youth soccer is the parents, because they are 100% helpful in what they yell from the sideline. The helpful, positive energy that they bring you know, the way they praise the referees and they praise the other teams, and they're never hurtful in their comments. That's the best. That's the most refreshing part of youth soccer to me, is all that parental energy. So enjoy that for the gift that it is. Anyway, say hi to the family for me. Much love, and we'll be with you on the field in spirit. So thanks so much, guys. Then thanks a lot, Bill. Our next scheduled session is at noon today, noon Central Time today. Jeff Southern's going to come in, and we're going to get going. So I will get this published and processed. I'm going to hang it as a downloadable file inside of your lesson. I inadvertently put 2 copies of that at 2 different lessons, so that's going to be just one lesson under Bill's name, and the recording session of it will be a downloadable file inside of that lesson. And when we get, you know, future questions or whatever, we're going to put an FAQ in there as a way to answer the questions in a growing fashion. So that lesson could very well end up being a course in the future. Think of it as a growing course. I will collect the questions, post them in there as a downloadable file. The answers that Bill gives will be part of that FAQ. And so that's going to be a repository inside research now and forever, you know, amen. 2024, we'll do the same thing with a new set of folks, but for the year ahead, your lesson will expand, much like that little tree that's growing inside the greenhouse. That lesson inside Rizuka will be where all of the material for this will continue to grow. So any last comments, Bill? And otherwise, we'll hit the tones and declare job well done as always.
Mission accomplished. All
right, fellas. 3, 2, 1, and we're done. We will see you in about 90 minutes for Jeff Southern. Equally amazing in a completely different way, but that's sort of what you would expect. It's a remarkable presentation coming up. So thanks so much, Bill. Everybody take good care.